Hello everyone, I am Srinivas. I welcome you all for my today's video lecture on how to prepare final accounts. So before starting the final account sum, we are required to follow the following steps for solving any final account sums. So these are the steps we are required to follow while solving of the final account sum. First one, after going through the sum, we need to prepare the pro forma or format for the trading account, profit and loss account and balance sheet. And the second step is we need to identify the adjustment items which are given in the problem under the trial balance table, and we need to identify those adjustments, and we need to put the tick mark or we need to circle those adjustments for identification purpose. So these are the additional information or adjustments. We need to identify these adjustment items in the given sum, and we need to put the tick mark or we need to circle these items for identification. So coming to the third step, post the items from trial balance to final accounts according to their nature. According to the sequence, we need to transfer the items from trial balance to trading account, profit and loss account and balance sheet. And the next one, after transferring of all the items from trial balance to final accounts, we need to post the adjustments. Every adjustment must be recorded twice because we are following the double entry system of accounting. The final step is finalizing of the trading account to find out the gross profit or gross loss, and we need to transfer either gross profit or gross loss to the next account, that is profit and loss account. Gross profit, suppose if you are getting gross profit, that should be transferred to P&L account credit side. Suppose if you are getting gross loss, we need to transfer gross loss to profit and loss account debit side. And also after transferring of all the items, we need to balance profit and loss account. We prepare profit and loss account to find out the net profit or net loss. And finally, net profit or net loss also we need to transfer to balance sheet. The fundamental rule is that suppose if you are getting the gross net profit, the net profit should be added to capital. If we are getting the net loss, that should be subtracted from the capital. So these are the following steps we are required to follow while solving of the final account sum. So this is a sum given all of you from the following trial balance of Merces Srinivas Enterprises. Prepare trading account, profit and loss account and balance sheet for the financial year 2022 and 23. And this is about trial balance table, and below this table additional information is also called as adjustments given. 6 adjustments are given: closing stock, outstanding salaries, prepaid insurance, accrued interest, discount received in advance, depreciation on machine. The first step, we are required to prepare the format or the pro forma for trading account, profit and loss account and balance sheet. So in this formats are already designed. This is a format for the trading account, this is the format for the profit and loss account, this is the format for the balance sheet. The first step, we need to maintain this standard pro forma using proper titles. If it is a trading account, we need to maintain the debit left hand side, credit right hand side. And the pro forma, I suggest everyone to maintain the inner column, both debit side as well as credit side, because final account sum are usually having the adjustments. All the adjustment items must be shown in the inner column. The final figure will be shown in the outer column. So I suggest everyone to maintain the inner column and outer column to avoid unnecessary scratches. So similarly for the balance sheet is a statement of assets and liabilities, and we should not maintain debit and credit for the balance sheet because balance sheet is a statement. So left hand side liabilities, the right hand side we need to show the assets. So this is the first step, all of you. So coming to the second step, we need to identify the adjustment items in the trial balance and put the tick mark for those adjustments. So let us identify those adjustments. The first adjustment is closing stock. Closing stock as on 31st March 2023. Sometimes 31st March 2023 stock means closing time, closing stock, closing ending time period stock. Any stock is given at the end of the financial year or calendar year, that will be considered as closing stock. We need not identify this stock in the trial balance. We need to show the closing stock in two places. First we need to show trading account credit side. Second one we need to show balance sheet asset side. Except closing stock, remaining all the adjustments we need to identify in the trial balance and we need to put the tick mark. So the second adjustment is outstanding salaries. So we need to put the tick mark for the salaries, all of you. Second one, prepaid insurance, put the tick mark for the insurance. Fourth one, accrued interest, interest which is given credit side of the trial balance. Discount received in advance, credit side of the trading account. Depreciation on machinery also we need to identify. In addition to this, two items also we need to show. We need to post some other items like capital. Always capital we need to show inner column to adjust from net profit. If net profit comes, we need to add to capital. If net loss comes, we need to subtract from capital. So always capital amount we have to show in the inner column only. In addition to that, any sum, you can take any sum. So purchases, purchase returns, sales, sales returns. So purchases, purchase returns, sales, sales returns. Sometimes in the given sum, purchase returns given. So what we need to do that, always purchase returns must be subtracted from purchases, and sales returns always must be subtracted from sales. If sales returns or purchase returns are not given in the sum, we can directly show those items in the outer column. Whenever the returns given, in that case only we have to show those items, purchase amount as well as sales amount in the inner column, and we need to subtract those returns from the purchase. Purchase returns will be subtracted from purchases, sales returns subtracted from sales. So this is the second step, all of you, and we'll move to third step. Post the item from trial balance to final accounts according to their nature. So this is a sum, and we start solving of the sum. Third step, we will directly move to third step, and according to the order only, sequence only, we will post it. The first item is given in the trading trial balance debit side, purchases. So where we have to post purchases. Purchases is considered as purchase of raw material. We use the raw material in the factory. So basically trading account is related to factory. Any expenses which are incurred at factory level will be considered as direct expenses, will be shown debit side of the trading account. So all the direct expenses, any expenses which are incurred at factory level for production purpose, will be recorded debit side of the trading account. So as I mentioned clearly that purchases amount will be shown debit side of the trading account, and the amount will be shown in the inner column. The amount of purchases 3 lakhs, the returns 50,000 rupees. So first show the purchases amount inner column. The amount of purchases 3 lakhs, because purchase returns we have to subtract it, right? So minus purchase returns. So amount of purchase returns 50,000 rupees. So subtract this 50,000 rupees immediately. 50,000 we need to subtract it. So final amount we get it 2,50,000 rupees. So coming to the second item, salaries, there is an adjustment for salaries because we have identified, we put a tick mark for the salaries. So we need to show the salaries in the inner column, and salaries we pay to the employees. Employees, they work in office. So profit and loss account is related to office administrative related expenses are shown debit side only. So show the salaries P&L account debit side to salaries. So there is an adjustment for salary amount is 1 lakh. So salary amount is 1 lakh, there is an adjustment for that. You can show we can do the adjustment at the end only. The third one is discount. Whenever discount is given debit side, it is called as discount paid or discount allowed. Any item which are shown debit side is usually considered as expense, loss, even asset. Any item which are shown debit side which is considered as expense, either it is a direct expense which are shown debit side of the trading account, or another expense is indirect expense which are shown P&L account debit side, or it may be loss also, like bad debts, any kind of depreciation, so will be shown debit side only, and also assets also will be shown debit side only. So discount, if it is given debit side, it is called as discount paid or discount allowed. So discount paid amount, no adjustment for discount, the amount is 50,000 rupees. So discount will be shown P&L account. We have to give some space, some gap to do adjustment for salary. So to discount, there is no adjustment for discount. The amount of discount, no adjustment, so we need to show the amount in the outer column. Next one, commission paid. Commission paid is also debit side, means expense. So commission paid means expense only. So debit side of P&L account. To commission, the amount of commission, no adjustment for that. So we have to show the amount in the outer column. The coming to the insurance, there is an adjustment for insurance, amount 10,000 rupees. Again, insurance is also indirect expenses. Insurance premium is an indirect expense, so we have to show debit side of the profit and loss account. The amount of insurance 10,000 rupees. The coming to the opening stock, last year closing stock is considered as this year's opening stock. Last year's stock will be used again in the production purpose at factory level. So opening stock is considered as direct expense. So we have to show the opening stock trading account debit side to opening stock. The amount of opening stock 1,10,000 rupees, outer column. So coming to the rent, which is not clearly specified. Rent we are paying, we pay the rent for factory, we pay the rent for the office building. If factory rent is given, we have to show debit side of the trading account. If office rent or godown rent is given, a godown rent paid mentioned in the sum, that will be shown P&L account debit side. If nothing is mentioned, there is an ambiguity on this kind of expense So any kind of such expenses will be shown P&L account debit side only. So to rent, we have to give some gap because we have to do adjustment for the insurance. So rent we have to consider it as indirect expense. So amount of rent 40,000 rupees we have to show outer column because there is no adjustment for rent. The next one, electricity charges. Again, electricity charges incurred, like payment made at factory level. If electricity charges incurred at factory level means electricity charges within the bracket factory is given, we have to show debit side of the trading account. Electricity charges within the bracket office is given, we have to show P&L account debit side. If nothing is mentioned, like if it is given like this, electricity charges, no clarity on this kind of charges, we have to directly show P&L account debit side. So electricity charges to electricity charges indirect expense amount 15,000 rupees. So coming to the machinery is an asset to the company. Machinery is an asset to company. So we have to show the machine asset side under the balance sheet. So the amount of machinery 2 lakhs. There is an adjustment for machine. We have to show the amount in the inner column. The machine value is 2 lakhs. Then coming to sales returns over land. Again, land is a asset to company. We have to post this item in the balance sheet asset side. So land, there is no adjustment for land. The land value we have to show directly in the outer column. The land value 5 lakhs because there is no adjustment for land. So directly we have to show the amount outer column. So coming to all the debit side items completed, and we will move to credit side. The credit side, the first item is sales. So sales we have to show credit side of the trading account by sales, and what we need to do, that sales returns must be subtracted. So first of all, what is the value of sales? 4 lakhs. Sales returns 40,000 rupees. So sales 4 lakhs, show the inner column 4 lakhs minus the amount of sales returns 40,000. So 4 lakhs minus 40,000, it becomes 3 lakhs 60,000 rupees. This is the final figure, all of you. So coming to the purchase returns, already we have subtracted from purchases. Capital is always considered as liability to company. Capital, go to balance sheet, show the capital amount always liability side, inner column, whether the adjustment given or not, we have to show the amount in the inner column itself. So coming to interest received, credit side, indirect incomes, direct incomes, direct revenue sales, indirect incomes and liabilities. So interest received we have to show P&L account credit side. So there is an adjustment for interest by interest received. So there is an adjustment for interest here. The amount of interest received is 40,000 rupees. So 40,000 rupees we have to show the inner column. 40,000 rupees we have to show the inner column. So coming to discount received, there is an adjustment for discount received also 10,000 rupees. This is also indirect income. We have to give some gap by discount received. the amount of discount received 10,000, we have to show the inner column, all of you. Then coming to bank loan. Bank loan is a liability. We have to give some gap here. Bank loan is a liability. So bank loan, the amount of loan is given as 2,50,000 rupees. So 2,50,000 rupees, no adjustment for bank loan. We can show the amount directly in the outer column. So coming to bank overdraft. Bank overdraft is a liability, short-term liability. So bank OD, we can short form for overdraft is OD. We can show the overdraft, the amount of overdraft is 50,000 rupees. We can show the amount directly in the outer column because there is no adjustment for bank overdraft. Finally, the commission received 25,000 rupees, which is considered as indirect income. So commission received is the indirect income by commission received. So if paid is given, we have to show debit side. If received comes, we have to show credit side. So the amount of commission 25,000 rupees, we can show the directly in the outer column 25,000. So here the third step we have completed and we move to fourth step. Post the adjustment items in the final accounts. So we move to the sum. The first adjustment is closing stock. All of you, closing stock, what we need to do that? First we need to show trading account credit side by closing stock. First one, we have to show closing stock credit side of the trading account. The amount of closing stock 1,50,000. 1,50,000 first over, and second one we have to show closing stock balance sheet asset side. Closing stock balance sheet asset side 1,50,000 rupees. So the first adjustment we completed just now. Closing stock we have shown trading account credit side and balance sheet asset side. The second one, outstanding salaries. See, whenever outstanding salaries, outstanding word, whenever the outstanding word comes, remember this mathematical symbol, add and show liability side. See, salary is an expense to company. Every year company has to pay 1 lakh of salaries to the employees. Suppose in the given sum outstanding salary is given. What is the meaning of this outstanding salaries? Company, there is a due to the company. Company has to pay the salaries to the employees. So already how much salary paid by the company will be shown clearly under the P&L account, all of you. Where do you show salaries paid? Debit side. Salaries paid will be shown debit side. To salaries paid, 90,000 rupees paid. But how much salary company has to pay? 1 lakh. Till how much amount is due? 10,000 rupees. So that is the reason outstanding means add. Outstanding salaries 10,000 rupees. So it becomes 1 lakh. And again in the balance sheet, the outstanding salary, this is liabilities, this is assets. So outstanding salary payable is a liability to company. Outstanding salaries. How much outstanding salary? 10,000. So the fundamental rule is that whenever outstanding either salaries or rent or interest, commission, anything is given, simply remember the rule is plus, we need to add, and next we have to show liability side. So we follow this step, all of you. Outstanding salaries 20,000 rupees. So where the salary is given is profit and loss account, debit side. See, first we need to add outstanding salaries 20,000 rupees. So it becomes 1,20,000 rupees. Again this 20,000 rupees we need to show liability side as outstanding salaries 20,000 rupees, right? So we have posted two times. First we have added outstanding salaries to salaries under the P&L account debit side. Next we have shown outstanding salaries under the liability side of the balance sheet. So first adjustment, second adjustment is over. Moving to prepaid insurance. This adjustment is contracts to the second adjustment. The outstanding salaries, the opposite adjustment for this is prepaid insurance. So in the working notes, what we have done for the outstanding salaries, we have added, right? And again we have shown liability side. But whenever prepaid word comes, prepaid means what? Paid in advance. Whenever prepaid word comes, remember this, minus and show the asset side. Earlier what we did for outstanding expenses, we have to add and we have to show liability side. For now prepaid expense, we paid the expenses in advance, that we have to subtract and we have to show the again that amount under the asset side. So prepaid insurance is how much? 1,000. So prepaid insurance, where we have show the insurance P&L account debit side, and we have to subtract insurance, prepaid insurance 1,000. So 10,000 minus 1,000, it becomes 9,000. It means 9,000 only we have to pay the insurance premium, but we paid 10,000. 1,000 rupees extra we paid to the insurance company. That is our money, our company money. So that is asset to company. So prepaid insurance is asset to company. Prepaid insurance, how much? 1,000. So 1,000 is the extra amount. Then finally accrued interest. Fourth adjustment is accrued interest. Accrued interest, say interest received, how much? 40,000. Accrued interest is 20,000 rupees. So whenever accrued interest is given, the company has to receive, the company has to recover that money. So accrued interest is always, we need to add it, 20,000 rupees we need to add it. So it becomes 60,000. It is company money. So accrued interest is always asset to company. First we have added to the interest, that income. Second one we have to show under the asset side, accrued interest 20,000 rupees. Next one, the discount received in advance. This is again contracts to accrued interest. Outstanding salaries, outstanding expenses and prepaid expenses. which are usually shown debit side. It means expenses. For expenses we use this kind of adjustment. So prepaid expenses, outstanding expenses and prepaid expenses. For income we use the name of the adjustment like this: accrued interest, and accrued interest means accrued incomes, and income received in advance. Such kind of items we have to show the credit side only. So here the discount received in advance. So discount received, we have to, the amount of discount received here is 5,000. So what we need to do that? So we have to subtract minus the advance amount. So the advance amount we have received. So discount received in advance amount is 5,000 rupees. That we need to subtract. 5,000 rupees we need to subtract. Actual amount we have to receive only 5,000, but extra amount 5,000 we received. So 5,000 rupees is not our money, we have received in advance. So that is we have subtracted. The second we have to show liability side. So interest received in advance 5,000 rupees, we have to show liability side. And next one, in fact is the last adjustment, depreciation on machine 10% per year or per annum. The value of machine is here given 2 lakhs. So always what is the value of the machine? 2 lakhs. So what we need to do that here, 2 lakhs into 10% is given 10 by 100. So for every year for machine 20,000 rupees of depreciation is occurring. So what we need to do that, depreciation always must be subtracted from the asset minus depreciation. The amount of depreciation is 20,000 rupees. So 2 lakhs minus 20,000, it becomes 1,80,000 rupees. Again depreciation we have to show, we have to consider depreciation as a loss to company. We have to show the depreciation under the P&L account debit side to depreciation on machine. The value of depreciation is 20,000 rupees. So we have done almost at the end of the solution, and we need to finalize the trading account. First we need to finalize the trading account, all of you. We are going to finalize the trading account. Only outer column we need to total the outer column only. Using calculator we need to total this. Initially we need to check whether the debit side balance under the trading account is higher or credit side balance is higher. By looking at these items we can understand that the credit side balance in the trading account is more than debit side balance, because credit side figure is 3,60,000 rupees, debit side is 2,50,000 rupees only, and moreover 1,50,000 rupees amount is available. So what we need to do that, using calculator, 3,60,000 plus 1,50,000. So amount is 5,10,000 rupees. So 5,10,000 rupees we have to show here, 5,10,000 rupees. Same amount we have to show here, 5,10,000 rupees. So from 5,10,000 rupees we need to subtract the debit side items, 2,50,000 minus 1,10,000. So we are getting 1,50,000 rupees as the amount. So this 1,50,000 rupees, 1,50,000 rupees amount. So this is called as to gross profit carry down See, whenever credit side balance is more than debit side balance, here in this problem, credit side balance is more than debit side balance. How much is more? 1,50,000 rupees is more than credit debit side balance. If sometimes debit side balance is more than credit side balance, we should consider that amount as a gross loss. So what we need to do, that gross profit, always gross profit should be transferred to profit and loss account. Transfer to profit and loss account. So we need to transfer gross profit to the profit and loss account. How much gross profit we got it? 1,50,000 rupees. So by whenever gross profit comes, that should be shown credit side. See, the rule of thumb is what here? Debit side we have to show the expenses, losses. Credit side we have to show the incomes and profits. We have got gross profit, right? So gross profit should be shown credit side only by gross profit brought down. B by D means brought down. The amount of gross profit we have got is 1,50,000. Similarly, we need to balance this profit and loss account. Again we need to check using calculator. Opening calculator, here we need to balance, we need to check whether the debit side balance under the profit and loss account is more than credit side balance, or credit side balance is more than debit side balance. By looking at this items, we can understand that credit side balance is more than debit side balance. We check the amount of credit side balance on the P&L account: 60,000 plus 5,000, 25,000 plus 1,50,000. The total amount is 2,40,000. Here 2,40,000 rupees we have to post here. 2,40,000. From 2,40,000 we need to subtract all these amount. 1,20,000 minus 50,000, 30,000, 9,000. Here we can understand that here by looking at this balance, we can understand that we are getting credit side, debit side balance is more than credit side balance here. So what we need to do that? So again we need to verify clearly here. So here debit side balance, because 1,20,000 debit side balance is higher here. So 1,20,000 plus 50,000 plus 30,000 plus 9,000 plus 40,000 plus 15,000, 20,000. So 2,84,000. Debit side balance is 2,84,000. So 2,84,000. We need to show here 2,84,000. Here debit side balance is more than credit side balance. 2,84,000 minus 60,000, 5,000, 25,000, 1,50,000. So 44,000 rupees is considered as the gross loss. So 44,000 rupees. See, 44,000 rupees we need to consider it as gross loss by net loss carried down. Transfer to balance sheet. Whenever debit side under the P&L account balance is more than credit side balance, we get the net loss only. If credit side balance is more than debit side balance, we get the net profit. So according to this sum, we have got the 44,000 rupees as a net loss. So what we need to do that, net loss, whenever net loss comes we need to subtract it, minus net loss of 44,000. so what we need to do that again, so from capital value 5,70,000 minus 44,000, so final amount is 5,26,000. so 5,26,000. so here we need to balance this balance sheet by verifying of these totals using calculator. 5,26,000 plus 2,50,000 plus 50,000 plus 20 plus 5, 25,000. so we are getting 8,51,000. 8,51,000 liabilities, total liabilities. Again we need to verify these total assets. The total assets 1,80,000 plus 5 lakhs, 1,50,000 plus 1,000 plus 20,000, 21,000. so exactly we got the 8,51,000. we should get exactly this value as per the accounting equation. The total capital plus liabilities must be equal to the total assets of the company as per the accounting equation. so we have got the 8,51,000. We have done the correct procedure, and this is the way we need to solve the final accounts. In the next class we are going to discuss one more sum under the final accounts using different adjustments. Thank you and all.